Morning, everybody. So, looking at the Dow. So, yesterday we spoke about this rejection bar on the weekly of Tekinson and Keejensen. So, this bar over here. And I said to you, if we get a break below this area here, you can expect more downside. Now, I wasn't expecting that to happen in one day, but that's exactly what happened. And you can almost see. So that was roughly the height of that bar. And you can see where the profit taking was. And just to make it a bit clearer for you, let's just put this in. Okay, so we'll go look at the lower time frames, but there's the range bar, and you can see where profit taking happened, right on the 200, which is the height of this range. So if I go down to, we'll just scroll straight down to the hour so I can see you. So I just want to get rid of this. So you can see that was the range, and here was today where we rallied up a little bit, found support at the 50% of that range, and then came all the way down to the 200. Okay, so this shows you that these range bars are very important to watch out for, because when they do break, typically they play out exactly as it has played out now. Now, the interesting thing here is that we still have this range bar in play, okay? And again, I'm just going to drill down to the 1 hour, and you can see where profit taking is happening, which is on 50% of that range bar. Now, you're going to find a lot of people that are going to be saying there's doom and gloom and we're moving beyond, etc., etc. But for me, until this range fails, because we've had 1, 2, 3 days of close above this level, okay? And then you'll also notice that the Fibonacci from here to here will be pretty close to the 50% at the moment. Well, we're the tail of this of yesterday is daily. We may still hit the 200. So we still may have some movement to the downside. But for me, I think this wedge is playing out perfectly. And it all really depends what the algos are going to be using as their wedge target. So right now we're kind of at the 50% of the wedge height, which is for me the first target of any wedge, and then the second target is where the first touch would be, which would be here. Okay, but we're going to have this resistance level here. Okay, so just switching back to weeklies, so highlight how important this is. These range bars are important. When you see them, watch out for the break either side. Okay, it doesn't always happen like it happened yesterday, but it does happen, especially on the higher time frames. So let's just delete that, and I just want to get us some levels here that may be applicable. The only other one is going to be this area here. You can see where it was used as resistance, and it's been used as support as well. So that's probably our main level that we have at the moment, and it wouldn't surprise me if that lines up pretty close to the 200 daily EMA. Yep, there we go. Okay, let's delete that. Let's get rid of the wedge for now. Before we get rid of the wedge, If I copy that and put that onto there, can you see where profit taking happened again? So where we are now, this area here is a pretty strong level, okay? So it's a very strong support level. You've got the 200-day EMA here. You've got all these tails here. You have the potential of a wider channel being formed, okay? And a break of this channel and a break of the 200-day moving average is going to give us a bigger target of kind of this area here, 22,830. There's nothing much at 22,830. So a break of this level here is going to pretty much give us a free fall down to that area there. You see this area of congestion here. So that's kind of the setup that we have at the moment. But let's just have a look at what the ichimoku is telling us, because that will give us the indication of exactly what's going on. So for starters, we can see we bounced off a 200 and we moved with a bit of a struggle to the underside of the cloud. Got the underside of the cloud, we rejected that and pushed on down. Chico span was below price and it's been below price all the time. We did have a bearish crossover of Dickinson and Kijinson here for this little move down, and we stayed bearish until we crossed over at the underside of the cloud. Okay, but that was the only bullish signal that we had. Price action, we had the wedge, and the wedge broke to the downside. And there was a lot of resistance on the break of this wedge, and I think that's typical in a very strong bull market that we've had. Now the bulls are still trying to fight to keep this up. So where are we now? Well, we haven't had any bearish crossover. We still have a bullish crossover in play here on the daily, but let's just drill down to the 4 hour and just have a look at what we are doing there. Okay, so now you can see from a Ichimoku's perspective, you can see how we broke through price here. Okay, we then had a bearish crossover there. We came down into the cloud, came back up, and we rejected Dickinson. So that was kind of your level to trade off. You'd been watching, and the way you do it is to watch this level here. Just put an alert in here if you're running around, and on the close of the 4 hour bar, just have a look to see what's happening on the lower time frame. So if I just put that line in there, okay, and we make it red, okay, that's our weekly Kijinson. Now drill down to the hour to see what we get, and you can see we have another range bar over here. So a break either side is going to give us an indication. Rejecting off the top of the cloud, and you can see the Brooks gap over there, and you can see the previous breakouts over there. So the Brooks gap is this bar here, and that's the previous breakout there. Okay, and you can see what price did in that zone. So normally when you get to Kijinson, there's normally some kind of rejection off it, and it bounces down. Very rarely does it shoot through. Okay, so that would have given you a signal there. I just want to come back here because there was a pretty important weekly level, which was that one there. Okay, so the underside of this area was a pretty important level. And let me show you on the lower time frames and you'll see what I mean. So you can see how when we got here, price was hovering around. Now in normal circumstances, that level would have held and it would have moved up. May not have moved all the way up, but it definitely would have come up to either test the underside of the cloud or come up to Kijinson before moving to the downside. But yeah, it didn't. It hovered there for a bit and then flew through that. And you can also see when a big level like that breaks, you can see what kind of price action happens. So where are we now? So as I said, we are at the 50% of the weekly range right now. Okay, we are also got a flat Tekinson on the hour, and you can see how Kijinson is now rolling around, and you can see how the cloud is pointing up. Okay, we have a few magnets up. We've obviously got the daily pivot, and we've got the Kijinson here. So this could play out to be a double bottom of sorts. Okay, and let's just get some other levels in here. So there is a previous swing low, and I think the important level to pay attention to today is a 200 EMA. Okay, make it pink or purple. That's the same. Okay, so let's get back to the hour and try to figure out what we need to do. So okay, so this level and the 200 moving average is all in the same area. Okay, so that is from where we are now. That's another 1% fall. That's another 280 odd pips. So for me, I would expect somewhere in this area for us to start building a base. Okay, now if the bulls have any chance of making this happen, it's going to be to keep this as the new uptrend. Okay, if this fails, then their next attempt at an uptrend is going to be there. If that fails, then the bears will have this downtrend intact. Okay, play it to the downside. So now you'd also see there's a triangle here. So is this a fake out of the triangle, or was that the first breakout for us to continue? So either way, the area to watch today is going to be this area where we are now, right the way down to the 200 moving average. So if this trend line holds, then you'll be able to play your longs off this trend line. And again, I'd play not to hold for a long time. So I'd really take a bounce off here, trade at the upside, move stop to entry as soon as I can, and take profit at the daily pivot to start with, take profit at Kijinson, and then wait for the next pullback. If the next pullback is a higher low, then get back in for a longer term trade, probably to this zone of resistance again, or a break of this will give us the range targets in play. However, if we break this trend line, then obviously this is the area to wait for. Okay, you play the short to here, and then play the long off this level as well. It's kind of tough to call what we're going to do. we want to see some kind of a base form before you play for any medium to long-term longs. So right now, for me, everything is a scalp. And we are still in this triangle. So are we going to find some support here? I would suspect us to find some support here. There's just way too much going on at this level for us to shoot through that. So find some support, maybe a bounce back up. And bear in mind, we still do have a bullish crossover. Okay, so a bullish crossover there, so you can expect some more ranging or another attack to the top here. But what could happen is we could just come up to a sort of a 50%, 60% of this down move, somewhere in this area here, before we move down, and then this triangle kind of play out until it really does explode. And I think last thing before we go is, let's just do this. So what we could basically do here is just extend that triangle. And now we have a much wider triangle at play. So back to there, back to here, back to there, back to here, until we eventually break up or break down. So yeah, so areas to watch, just watch this trend line, see what happens here. I suspect we bounce a little bit off here. If this gives, then that's the area that we would be looking for. Okay, and pay attention to the bigger picture here as well. There is a big flat bottom triangle brewing. There's the top of it, and this purple line is the flat bottom, which coincides with your 200. So a break of this area will bring us all the way back down to the bottom of that weekly range, and it may actually play out that we have this breakout fail. Okay, so for me, the high probability right now on this range bar here if we draw that right. Yeah, so for me the high probability is that we have had 3 days that have closed above it, which is a positive sign. Okay, so the higher probabilities trade for me is a break to the upside. If we break the 200, then this breakout's going to fail, and we may actually get this one in play. But one of them is going to play out. So, and what we're talking about is another 1,200 point move, sort of a 5% swing on the Dow. So yeah, so watch carefully, pay attention to the levels, so your 50%, your 200 moving average, and this trend line. If any of that gives, then further downside expected, and this is kind of the area that I'd be looking for if we take out this low. It'll be around here. Anyway guys, hope it helps. Catch up with you later.